Hey everyone, welcome back to the channel. This is Richard and Ray from TraderLion, and today we're going to be continuing on with our winning characteristics series, talking about AMD and actually both of our recent trades of this stock. And then really the focus of this video is not really on how we made some money on this trade. It's really about setting yourself up and establishing a routine so you can catch this type of breakout. So in this video, we'll be going back in time, talking about the character of this stock. We'll be talking about the fundamentals, the winning characteristics. And if you want to know more about these specific winning characteristics and the leadership blueprints that appear over and over before a stock goes on a major run, you can check out the Leadership Blueprints course, which will be linked down below in the description for a lot more in-depth analysis and explanation of all the different things that we look for over at TraderLion. So go ahead and check that out. There's also a promo code down there for 25% off. But with that, Ray, let's get started with the video and start from the top discussing AMD.
For sure. So in this video, we're going to discuss a few concepts. One of the first ones is going to be the importance of base depth while a stock is building a new base or correcting while the market as a whole in the growth space is not doing so well. So one of the first things to point out on AMD is the fact that the base depth on this particular stock was less than 40% to start with, but also very low at 27%. So this tells me one of two things: that the retrace that we're getting off of highs is fairly controlled and logical, and AMD itself has seen such such action in the past, and it's below that key figure of 40%. So it's controlled, it's logical within its whole structure. It's just, the stock is resting after having its run from the 59 area up to the 94, 97 area. And then we get a logical period of rest basically from December to right about, the recent action that we've seen in July. So if you study winners in the past and how AMD got up to this point in the 90s, you'll see the base depth when it was correcting be very logical throughout its runs, and then when it did make its run, it would really go, and then we get another resting period, and then now it's attempting to go again. So that was one of the first concepts: is when the markets or growth space goes into correction, keep track of stocks with base depths of less than 40%. The good ones are always going to be below that 40% mark, and you want to keep track of those, because when they're ready to go up and out on the right side, they will really be the first ones to jump to new all-time highs or new 52-week highs in the markets. So that's one of the first concepts that we wanted to discuss. The second thing that's fairly important when you're looking at a stock is to learn its behavior of what has done in the past and how it's acted in the past. How has it based in the past? Does it base very logically while it's pulling back in, and then it puts in higher lows, and then tries to go up the right side, and how fast does it get out of that base, right? So with AMD's case, what we've seen is it's done this in the past. So this action, where it comes out of that base very quickly on big volume right after earnings, it's done something similar like that in this area as well, where it frustrated many people, right, for many months. And then when it was time to go, it would really go for it. So the stock always, when you're trying to position in something, the way you learn the behavior of what the stock is doing is always look to the left. So right now I have about the 1 year daily up, but if I were to scroll back to AMD, it's done something similar in the 30s as well, right? Where it got, tested 35, sort of was dormant for 2, 3, 4 months. And then when it was time to run up above that 35, it would put in a fairly large run. If you didn't get into this area, it would still give you a chance here, but then you get 35 to 60. That's good for a stock that's very liquid and in the eyes of the market all the time, right?
Hmm.
So learn the behavior of the stock by looking to the left to its prior runs. Stocks that trade up in the hundreds have historical data that you could look at. You can always interpret their action and how they trade by always looking to the left. So if I was trading this back in 2019, right, I would go back and see, how does it move? It has these spurts where it just goes, right? So, and then it sort of did the same thing. It went, it really go when it starts moving, it really starts moving. That's just how the behavior of this particular stock is. Now, when we go back to 2021, it's doing the same thing that it's always done, right? You learn at this point in this area or this area or this area, if you learn the behavior of the stock, you're anticipating this sort of move, right? Out of it, because that's what it's done. So that's important. So we discussed base depth being less than 40% when overall growth is in correction. Keep track of those bases that are less or very logical pullbacks and very controlled action within the base. Second thing, always look to the left when you're trying to position and anticipating the next move on the right side. Always look to the left to see what is it that you're anticipating. You should be anticipating this sort of move on an AMD, right? Now, let's say we're not talking about AMD and we're talking about some other stock. Each stock sort of has its own behavior. Some stocks go up slightly, consolidate, correct, shake out, and then keep going, right? And you just have to learn the behavior of what they're doing. AMD's
Right.
behavior is it's going to do this, and it's done that in the past. Um,
And you also wanted to talk about the waiting for your pitch within that base and waiting for it to set up with tight price action and low relative volume as well, because for a lot of this base, AMD was just kind of chopping back and forth. And you also want to talk about this failure as well.
yeah, so I'm going to zoom in here a little bit and we'll really get into the details of the base, right? So what are we looking for within the base? So one of the concepts that we discuss is we have our base depth, which is less than 40% at about 27% on this. Now, what's the optimal entry area, or at what point does a stock make a decision to turn itself around and come out of that base, right? So how do stocks do that? One way to go about it, you go back and you study bases and see what's going on within those bases. At what point does the stock make that decision? And one of the concepts that we constantly discuss is, well, let's say we start over here, right? So let's erase all of that. It's trying to come out up on the right side and experiences a failure. One of the first things that you could notice with this failure is there's literally no dry up in volume, and we're seeing above average down up days and above average down days.
Right.
So at some point when the stock starts to wants to come up the right side and really rally, we're going to see a lack of sellers on down days. And you'll see that if you pull up a chart of net right around that 80 area. It did something very similar. You'll see that on the chart of DDOC right around that, the right side, where it just tightens up for a few days there. And on the down days, there are really no sellers because you see below average volume, right? And for AMD, when it really squared up and it was ready to go on the right side, this is the area that really exhibited that first dry up in volume, right? We don't see a dry up here, right? Because the volume sticks are above average. I'm not making it up. What we're seeing in this area is, one, we get price action that's tight. So tight price action. And then two is on down days for AMD, there's a volume dry up, right? We see a dry up in volume. What that tells us is this is screaming that there's lack of sellers now.
Right.
There are no sellers left in this base. When you see that, just if we get rid of all these moving averages, and just keep volume, price, and a moving average on the volume itself, and we spot where is the dry up within the base, right? This is the dry up. This is the dry up within that base, right? This is really the first time it tightens up. It's very logical, right up on the right side. Down days are on low volume. And at this point, this is really what I call like the sweet spot where it's built for, there's a lack of sellers. When you have lack of sellers, it's time to win, right? Any buying is going to push this price up. So that's one of the things that you want to spot in the base. Where are the lack of sellers in the base? If you're anticipating here and there's above average volume, you really need this to go and work for you right away. When it doesn't, you cut your loss and you take it rather even, or you cut your loss right away because the action is above average volume right on this area, right? Now, the other characteristic that we talk about in leadership blueprints is the moving averages bunching up, and what we call that is really the launch pad effect. And if you go back and you study all of the, stocks that come up the right side and really go for it, they all exhibit this characteristic where the moving averages are going to really bunch up right underneath price. That's telling you that a stock on a 10 to 200 day basis or 10 to 65 day basis has seen similar closes, right? So it's been basing for that 65-day period, and now we're seeing all the moving averages bunch up. The cherry on top is there's a lack of sellers now, right? You combine those two characteristics together within a base, right? And you can anticipate the action on the right side very consistently in the markets on just about any base that you could find. There was similar action on DT. There was similar action on Net. There's similar action recently on Roku. There was similar action on DDOG. You could pick any software, any tech, anything that was basing that's come up the right side. It experienced this. It saw the bunch up. It saw tight price action, and then demand came in, right? This is demand coming in up the right side. So that characteristic, again, you could hear me listen, you could watch this video, but to really build, train your eye for that, you have to go back. There's a lot of historical data. Go study 300 bases that were made and came up the right side and how they acted, and you'll come up with a similar conclusion. And then that's how we came up with that conclusion. It's not out of thin air that we just say, KMAs do bunch up and let's hope for the best. It's really studying those bases, seeing what's going on, what's that optimal sweet spot within the bases, and how do they really get going. It's the lack of sellers plus, the 10 to 65 day closes all coming together to create this effect in a particular stock, which we call Launchpad under that Leadership Blueprints course. Now, if you want to go over the fundamentals, Richard, first, and then we could cover entry tactics and entry areas, or
sure. I want to add just a few things on this chart before we move over to MarketSmith. So first, we get a reset of the base count because we do undercut that prior base low. And moving up the right side, there's also signs of demand because we see a bunch of pocket pivot volume signatures here, and also on the breakout of this tightness. So there's a lot of good things here that shake out, basically gets rid of all the last remaining short-term holders and resets the base count so we could go on another potential run. So I thought I'd add that, as well as the pocket pivots coming in. That's another leadership blueprint that we see all the time, moving up the right side of leaders, showing that institutions are accumulating shares. And with that, I think let's move on to MarketSmith and also talk about the fundamentals as well, because this is a very well-run company and showing a lot of those growth characteristics. Okay, so here we are now in MarketSmith. Obviously, the first thing I always look at after the chart is I go down to the quarterly earnings and take a look at these. So obviously, ideally, triple digits. AMD fulfills that. That's fantastic. It's also supported by really strong sales growth as well as margins. And if you look at the annual estimates before this most recent earnings gap, or not gap, but earnings report, which started this nice run, the estimate revisions were still up, and the estimates for 2021 were about 67%, I believe. So really strong growth was expected, and we are seeing that reported quarter after quarter, even as the stock was basing, that this company was delivering. And also, if you go over to a weekly chart, Ray, the ROE on this stock is fantastic. Usually we like to see above 17, 18%. And with AMD, we have a very strong 36%. And that coupled with really strong fund sponsorship, including 2 high quality IBD flagship funds and a bunch of new products that they brought out recently, the graphics cards, which are fantastic. Everything was kind of going in favor of this company. And really, we were just waiting for that base to develop and set up a potential run like we're seeing right now in the stock. So that's a little bit on the routine when it comes to identifying the stock. I always go back and look at the fundamentals. What is the story? How are the numbers looking? What do the estimates say? What is that fund sponsorship? And from that point on, I personally was focused on this stock because I saw in an earnings whisper post that they were going to report that day. I looked that night and that morning and saw really strong numbers once again. Ray, if you go back to a daily chart, and that's really why I had it on my focus list for that particular day. I saw the very strong report, and I was expecting something to happen. And if it met my setup criteria and I was able to manage risk, that's when I decided to enter. So Ray, I can go ahead and talk about my trade first, and then I'd love to hear your side of the things as well. But to start things off, you go over to a 15-minute chart. Here we are. So when it comes to a reaction after earnings, I always like to wait to see what happens the first 5 minutes or so. And we can see right here, AMD right away sold off, which is not a positive usually. Most of the really strong earnings moves happen on a gap and go where a stock just takes off right away. And we did see a sell-off on high volume from AMD. However, it did undercut this range right here. And I was waiting to see whether some support would come in and basically if I was able to enter on a setup where I can manage risk below 2%. So what happened is I was actually looking at a 5-minute chart, but here we're on a 15-minute chart, but it shows pretty much the same thing. We see a nice inside candle and then a candle take out the high of that range. So it's an inside candle and up. It's a strat technique. And I was able to manage my risk under 2%. My first entry was 90.68 with my stop at the low of the day. And I entered with an initial half position. So even if I was stopped out, I take less than a 2% loss on a half position. So much less than, I think around 0.25% of my entire portfolio while getting a pretty sizable position on to start things off. And sure enough, AMD recovered strongly, nice volume coming in as it moved up the right-hand side, and it had an opening range breakout through this high. So this is when I decided to add. I added another half position onto my position, and that was at 93.55. So at this point, I have a full position. My risk is managed. On this second half, I had my stop at the low of the 15-minute candle here. So I was just basically in wait and see mode, and luckily enough, AMD took off, and I had a profit right from the get-go. And the next few days, we saw really strong demand come in. We had some moves down at the open, but then very strong recoveries. Volume buzz was enormous all these days, like plus 500%. And you could really see that basically institutions were supporting any move downwards and just buying that thing up. And I decided to basically cut half my position at around 30% gain on this day right here, after it moved really strongly and was over 20% above the 21 exponential moving average on a daily chart. And basically with the remaining half of my position, I'm waiting to see how the stock acts from here. Does it pull back to the 10-day in an orderly below average manner, or do we cut through that? And at that point, a close below the 10-day moving average on high volume, that's when I'll sell the rest of my position. Now I did on this day try to add back a quarter position and trade around that core with an oops reversal where we had a gap down below the prior day's low, and the buy here was back through that low, but I ended up getting stopped out, I think, for 0.5% loss here on a quarter position, so it didn't work. So right now we're seeing a lack of demand come in, but we did have a super powerful move in just 5 6 days. I'll always take a 30% move in 6 days if I can have it. So basically, I'm in a winning position, and I'm waiting to see how the rest of my position will act, and I'll manage it based on my current rules, which is a sell on a close below the 10-day on high volume. So yeah, Ray, any questions about how I trade this, or you can go ahead and talk about your trade as well.
Yeah, I mean, your entry was near perfect on this particular name for me. If I go to a daily, I
I'll
stuck
erase my thing.
to
Yeah.
yeah, I pretty much stuck to the standard pivot on this particular name. So um I'll talk about a few things. So what is an entry? Like what does it mean?
Right.
When we say entry. An entry is basically where is my edge? Where is my edge showing, right? Now, for some traders, and you really have to personalize this in the markets, is you have to ask yourself, where is my edge showing on the charts so that you could go out and execute. So Richard buying right around this area right after earnings, that's his edge showing on the charts, and he executes a trade that goes up and out. Now, as long as he's very consistent with how he entered AMD and he executes that and he's studied that, that's where the confidence is coming in, where he's
Right.
buying a pullback and then a reversal right up and out on volume on that, right? So he got in at $90 and change, put a stop basically a buck below his entry. That's his first initial move, and then when the stock confirms strength, he really pushes the pedal and builds out a full position. So it doesn't. There are no trophies being given on if you pick this low or you pick this area or this area. What you have to focus on is where is my edge on the charts, and how, like, is it something that I consistently do so that we can avoid randomness in our approach in the markets. So on this name, I really started picking it up here, and I traded it in this area because I was anticipating given the dry up, right? And then on this, and basically this run I didn't catch any of it because my focus was elsewhere, right? From what I remember, there were better names at the moment in this area when I was trading the market in the June area. So I just didn't catch this particular. So really, it got on my radar over here. So so what I'm covering is when does it make my watch list? That's the first step. How does it go from my watch list to my focus list, right? So it tightens up. I see a dry up. It makes my watch list. Then as it goes above this area, it makes my focus list. Tends to run up and out, and I had better names. That's okay. You don't have to trade only AMD. There could be other better opportunities in the market. And then my next trade on this particular name, so it basically pushes everybody out into earnings, right? Which is what we've seen with many names these days. But my particular entry on this was just the standard, your 95.44. So given that, I know that this name, when it tries to come out of its base, will run, right? It will try to do this, and it's done that from 55 to 94. It's done that from 33 to 55, looking to the left. So I know it has the ability when it wants to really string together a few days and give you 20 to 25%. That should not be a surprise to you at all. If you're, again, what we talked about earlier in the video is always look to the left to learn the behavior of the stock. So when you're up 25 to 30% on AMD, don't be surprised, because this is what it's been doing this for 3 years, 4 years, 5 years in a row, where when it comes out of a base, it goes and it does that move. So when a stock is behaving according to what it's actually supposed to be doing, that is a time to be thinking about how can I generate greater income. These days, my mind goes towards, can I buy call options to really get more out of this name because I know the character of the stock. I know it's going to really run out of that base. It's going to run 25%. And can I use some, the options market, or can I oversize my position at a certain spot to really get more dollars out of it? So on this name, I'll pull in my trade. It's basically this 95.67 area, which is right above your standard cup and handle pivot, right? IBD says go 95.44 plus 10 cents. So that gives you 54. I basically started buying it up into that pivot, and then I added a little bit right above that pulled my costs up above the standard pivot area. So how I traded this particular name is basically, if we say the 95 area is somewhere over here, it makes instant progress, trades that work for you. That's what you want in the markets if you're looking to perform. You don't want to wait for it to work, see if you could, hold it for 3, 4, 5 days when it's really not doing anything, just chopping around, right? This was one of those where it's coming out of a base pivot of sorts, a cup and handle textbook pivot. It works for you right away. My sells were on this particular day when it was the first fade below that 120 area. I sold a chunk, and then when it broke this 115 area recently, I sold the rest of my position. So again, the reason I'm selling out of it is because looking to the left, it has these spurts of basically where it's going to move 20, 30, 40, 50%, and then it's just going to die down, right? And do this whole thing all over again. So my focus in this market has been, I really oversized my position going through that standard pivot. I sold into strength, and then my goal in the markets is really a little bit different these days, is to get as much as I can out of a particular run and get my return and see where I could throw those dollars to get even more return. So it's perfectly fine to be holding this and say, wait for the 10-day, see how it acts coming into the 10-day, maybe does an undercut and rally of the 10-day and builds another spot right above this 100 area, or a pivot right where it says the 120. At that point, I'll re-enter where it says that 120, see what I could get out of it if it wants to do that. But it all depends on your personal goal, right? So for me, I'm scaling into strength when I see 26 to 28% move in a very short amount of time. At that point, my mindset is not, can I hold this for 5 years? My mindset is, wow, it's had an amazing run. I'm going to scale out, take that as income from the markets, and then scale the rest of it, see if it sets up a new spot versus 120. If it does, I'll pile back in and see what happens. So it all depends on your personal goals. My goal is a little bit different than, say, Richard's. Richard's goal is a little bit different, or the phase that he's in might be a little bit different than my phase where I'm purely focused on performance. So decide don't try to be someone, just be yourself. Know what phase you're in. If you're in the consistency phase, you're supposed to be sticking to, let's say the 2 closes below, but even the test of the 10-day, right? That's perfectly fine to be waiting for that. Maybe you sell some into strength, and then you take that first test of the 10-day, you add back the stock that you sold up here, and you start building that position out, right? So I guess to wrap it up, we could talk about the now a little bit. What are we looking at now? My eyes are basically on how does it, it needs to tighten up here, right? Because we've had this 122 to 110 range. I'm going to have my eyes on the easy one is the whole number 100 area, which lines up with this prior pivot. If it does do that, the market is likely coming in, right? I don't see how it does a whole pullback to 100 without the market just where the market just keeps going up. The other thing is their eyes are on 120, how it builds, maybe just really tightens up, comes right to that 120, and then it goes bust up and down. So all these scenarios are sort of running through my mind on going to keep tabs on it. I'm going to let it, consolidate, build me a new spot. As soon as it does that, and I see, some sort of dry up in volume, and then a U shape right back up, if it wants to, it will let me back in, and then I'll get more out of this particular name. So that's a little bit about my entry and exit. Should we do an overview?
Before we do an overview, I
Yep.
think it's good to reinforce that it's not about that Ray and I had decent trades on this stock. It's about the process, the routine that gets a stock like this on your radar, so you could potentially catch a move like this. And we talked about how you might first notice it right in this area where it tightens up along the right hand side, and then I discussed my process to basically have it on my radar that morning, after knowing it's going to report, knowing the fundamentals, seeing very strong earnings growth, sales growth, knowing about the strong CEO, the great revolutionary products they're bringing out. It's about setting yourself up for success, and then depending on your own style, Ray and I have different styles. The tactics to get in after you've identified a high potential winner. So Ray, I think you covered that really nicely in last week's video on GRWG. First identifying, and then basically being able to execute based on your own personal tactics. So yeah, for more information on that, definitely go ahead and check out last week's video.
Okay, let's quickly wrap, just to recap a few things. So we discussed in this video this failure, right, and why the failure here isn't really surprising. There's above average volume.
Yeah.
This area is where price tightens up, volume dries up. When price tightens up and volume dries up within a base, that means there's a lack of sellers, right?
Mm-hmm.
That's just, if you say that enough, you'll start to see it on the charts. The second thing we discussed was the base depth on this was 27%, which is pretty damn good for a stock. That tells you that the pullback is very logical and being accumulated by institutions, right, as it builds out a new base. We also said you want to learn the behavior of the stock. It runs, it goes when it wants to get out of a base. It doesn't mess around. It really goes. So seeing this action, if that surprises you, that means you haven't studied the markets enough. You should be studying the behavior of the stock. At this point, if you're trying to get into it, look to the left, look to the left, look to the left. The fundamentals were off the charts, really a textbook, increasing sales,
Yeah.
positive ROE and all that stuff, increasing institutional ownership, 2 flagship funds in there, and then the entry tactics, right? Whatever you do in the markets, if you aren't consistent with it, you have to be consistent in the markets with your ways, right? Have your edges listed out and consistently execute those edges, so that when it comes, time to perform, this at this point for me, through that 95.44, it was time to perform, right? So I could oversize that position 1.5 times, 2 times, because I built that confidence up and really get money out of this trade, right? So at the end of the day, if you're not consistent, then you can't build up your confidence. And if you don't have confidence, you won't perform. That's just how the markets go. So always study the markets, go back, look at, 400, 500 bases, print them all out. Look for this launchpad criteria that we're talking, where the KMAs bunch up, right? And then the last thing that I want to say before we wrap it up is, if you're on TradingView and you get the key moving averages indicator, for lack of a better word, we label that right on the chart with these green diamonds, where right here, this is where the KMA is bunched up and the stock is setting up for this particular move, right? This was also, in the area that it was setting up, but there was no volume to accompany that name, and we discussed this particular failure. So these areas in a stock where it's getting ready to perform, we'll start seeing these green diamonds. And then if we pull up a chart of, let's say, NET, same thing right around that 80 area, right? Experience an initial failure, but at this point, if you go back and look at the charts, there's a dry up, tightness in price action, goes for a run. Another one was D-Dog, right? This is very early on the right side in D-Dog.
Yeah.
Where moving averages bunched up and it started going ROKU. was another one that did this recently, right in this area, right? This whole base, we don't see any of the green diamonds show up. At this spot, it was just, you know, really getting ready, and we got, you know, you get a pretty decent return out of this trade, right? This is a, you know, 2, 3, 4 day move, where you get a pretty decent return. The last one I'm going to pull up is DT. This is another pretty, so very wide and loose action, but right in this area, you'll see a dry up in volume. Price action tightens up, and then it meets the criteria on this day, and then we get a run out of it. So really go and study things. You have to build confidence in your chart work, and your, you know, list out your edges. You have to repeatedly execute your edge in the markets. And when you see, you know, these areas, when it's time to perform, you could really size up and get alpha out of the markets. And I think that's a good spot to wrap it up.
Yeah, for sure. And if you want to help training your eye, check out Leadership Blueprints. Once again, the link in the description. And with that, if you enjoyed the video, go ahead and leave a like down below. Subscribe if you're new to the channel. And if you have any questions about what we've covered, either Ray or myself, let us know down below in the comment section, and we'll definitely try to answer as many as we can. And with that, thanks so much for watching, and we'll see you guys in future videos.